A summary of central banking. Before the 1900s, most central banks were mainly note issuers and government bankers, or agents known as national banks. The oldest central bank in the world was the Swedish Riksbank, which was founded in 1668. The Bank of England was founded 26 years later in 1694 and nationalized on the 1st of March 1946. In the United States, 12 Federal Reserve Banks were established, and the Federal Open Markets Committee, or FOMC, was established in 1935 as a national monetary policy body of the United States. It's interesting to note that the United States commercial member banks own all shares in the Federal Reserve Banks. In the 1900s, only 18 central banks existed worldwide. However, by the end of 2013, there were 177 central banks, the youngest of which is the Bank of South Sudan, which was established in July 2011. The growth of central banks is largely due to the prominence of monetary policy since the 1970s. This is also due to the increase in democracies worldwide, as well as the globalization of financial markets. Proposals for a central bank in South Africa were made as early as 1879, and after the Gold Conference of 1919, where Sir Henry Stratcoch of London convinced Treasury to pass a bill for establishing a central bank, the Currency and Banking Act was finally announced in December 1920. The South African Reserve Bank opened its doors on the 30th of June 1921, and the first governor was William Henry Clegg, who was also the chief accountant of the Bank of England. Jill Marcus has taken over since 2009 as the governor. Currently there are 6 branches and 1 depot found across the country. The main functions are storing of notes, distribution of cash to the various regions, servicing and quality control of notes, purchasing of gold coins from the public, and hosting board meetings. The primary operations of the central bank are the formulating and implementing of monetary policy, issuing of banknotes and coins, micro and macro prudential supervision and regulation, ensuring the effective functioning of the national payment system, to be a banker of the government and not the public debt manager, management of official gold and foreign exchange reserves, administration of remaining exchange controls, acting as lender of last resort in exceptional circumstances, and finally, collecting, processing, interpreting and publishing of economic statistics and other information. The South African Reserve Bank makes profits by lending money to the banks at the repo rate, issuing notes and coins, receiving per-rating income from foreign assets invested in offshore financial instruments, interest from government bonds on its balance sheet, and charging fees for banking-related services rendered to the banks and the government. The South African Reserve Bank is accountable to the government and Parliament, and submits annual reports as well as regular economic reviews to the Standing Committee of Finance in Parliament. The South African Reserve Bank also maintains a close cooperation with the National Treasury. Thank you for watching.